Hello and welcome. You're watching Let's Talk Business. We'll get you a wrap of all the big business headlines of the day, and starting with global cues and what it means for the markets. Well, amid positive global cues, encouraging quarterly numbers, markets ended on a positive note. In fact, markets halted the 2-week losing streak. Realty media were the top gainers in trade today. Hiral Dadia with a wrap of all the market action.
Absolutely, as anticipated, the markets continued to gyrate pretty much in a narrow range in today's session. And we did witness that consolidation as well. That base formation has absolutely happened over the last couple of trading sessions. If you see in terms of Nifty 50, ended above the 19,200 mark, 19,200 to 19,250 was that range that we were looking at. And overall, a 50 to 70 point range throughout the day. If you see in terms of Sensex as well, clearly in terms of the Sensex, good moves coming in there. It held up and we saw gains of nearly around 250 to 300 points coming in with regards to where the Sensex was concerned. Bank Nifty somewhere outperformed the benchmark indices in trade today. And overall, if you see the mid-cap and the small-cap sectors also gained. Realty actually has outperformed and ended in the positive for a fourth consecutive session. And pharma was also another pack that we have been eyeing. In fact, Divis Laboratories will be in focus on Monday on the back of the earnings that will be reported. The mid-cap index ended with gains of around 0.8%. And if you see the breadth in terms of the markets, that was absolutely in favor of the bulls. Let's quickly look at the top gainers. Apollo Hospitals next week will be reporting numbers, was the top gainer in trade today. Adani Ports, Aisha Motors, LTI Mindtree, as well as ONGC. In fact, ONGC also will be reporting earnings next week. On the losing end, you had names like Bajaj Finserv, DRL, SBI Life, IndusInd Bank, as well as Tata Steel. In fact, if you see in terms of Tata Steel, overall, if you it's mainly a city which has gone ahead and downgraded the stock, and they have a target price of 100 on the counter. In terms of movers and shakers, MRF was buzzing on the back of earnings. Titan was on the back of earnings. Bayer Crops are strong numbers, strong moves coming in there. Patel Engineering reported a strong set of numbers. Tata Motors as well was in the positive. Apart from that, Arvind Fashion will be selling Arvind Beauty brands to Reliance Beauty and Personal. So Sephora now goes in the hands of Reliance. And that stock was up in trade. KPI Green was up on the back of an order win. Godfrey Phillips was down on the back of earnings. Zydus and Lupin, Bharat Electronics, MCX, Zomato, Container Corp, these were a few of the movers and shakers. So overall, a day of consolidation is what we've seen. And for the week, mild gains, 0.5% to 1% is what we've seen in the markets. Back to you.
So a positive day on the Dalal Street. But moving now, with global headwinds, Indian markets are standing out. Will more domestic investors start taking advantage of the crisis? Well, ValueQuest investment advisors Ravi Dharamshi shares his views.
India, however, always provides this contradiction that in a crumbling world, we are actually standing out quite well. Our equity markets are not, as vulnerable. Of course, if there was to be a recession, if there was to be any kind of a crisis that starts in the developed world, it will have its implications on the domestic market as well. But as compared to the past, our markets are far more resilient. The domestic pools of money are far bigger, and they are ready to take advantage of any kind of crisis that unfolds, if it unfolds. So first of all, I have no idea whether the crisis is coming, not coming, it's coming now or whenever. But I know for sure whenever it unfolds, there will be domestic pools of money ready to take advantage of that. What happens is in a macro, you tend to take a very market-wide call. And in market-wide call, you tend to miss out on where some pockets of opportunities do exist. So yeah, we have made one big macro call, so to say, where we reduced our exposure to export-oriented sectors and focused more on domestic-oriented sectors. So manufacturing, domestic financials, consumer discretionary, those are the kind of sectors we aligned ourselves with, considering that the things were going to get tough in the global markets, global economy.
And moving now to our BQ Prime exclusive, well, we spoke to JPMorgan's chief EM equity strategist, Pedro Martins Jr., to understand the rationality behind JPMorgan upgrading India. Here's what he had to say.
The reasons as to why we upgraded India are basically two, right? There is a cyclical component to it. So the Indian equity market corrected. It was down at some point close to 10% in the recent past. I think this is closely related to the derating of the S&P 500, right? So higher rates, it's a headwind to high Ps. That happened in the US, and India obviously got the collateral damage for that. So that's one reason to use this near-term correction to add. And also there is, maybe it's a little bit too early, but we prefer to be early than late, and sorry, the positive historical seasonality of Indian equity market returns to general elections that will take place into next year.
And moving now, the State Bank of India will announce its Q2 numbers tomorrow, and the bank's net profit may decline in the quarter. What do analysts actually expect from the lender? Himansh Kanwal joins us with the details.
State Bank of India is expected to announce its results for the second quarter tomorrow, and the street is expecting it to post subdued profit growth due to higher operational expenses and compressed margins. Now, if one were to believe Bloomberg consensus estimates, the standalone net profit is seen to be around 14,300 crores. This implies a 7.8% uptick from last year, but a 15% decline on a sequential basis. Now, several banks have reported a decrease in their net interest margins for the second quarter as cost of funds have surpassed loans repricing. Brokerages like Kotak and ICICI Securities are anticipating a 10 basis point decline in the bank's net interest margins. Last quarter, the net interest margin declined by 11 basis points to 3.47%. Now, net interest income, on the other hand, is expected to rise by 10%, and consensus estimates point towards a figure of close to 39,000 crores this quarter. As brokerages, for most brokerages, asset quality is expected to remain stable, and Motilal Oswal mentioned that the asset quality is expected to improve, supported by a low-stressed asset pool. And the consensus gross NPA ratio points towards a figure of 2.69%, which would imply a downtick of 7 basis points from the previous quarter's 2.76%.
And in other news, Sapphire Foods India, the operator of Pizza Hut restaurants, reported a bigger than expected fall in quarterly profit on sluggish demand for pizza as well. BQ Prime spoke to Sanjay Purohit of Sapphire Foods about the Q2 numbers. Listen in.
Consumer demand headwinds continue, Hiral, and we've seen this post-Diwali last year. So now it's nearly 3-4 quarters where you can see private consumption slowing down undoubtedly. Within our three businesses, we've had a mix of performance. If I look at the Sri Lanka business starting to now come back as the economy starts to stabilize. Pizza Hut, we have had a challenge, and I'll talk about that in a minute or so. But really, the stellar performance has come in from KFC. Despite flat SSSG or same-store sales growth, we've grown revenue by 19%. And our restaurant EBITDA margins has come at 19.2%. And if you look at the first half, 20% restaurant EBITDA margins have been the highest that we have ever delivered. So if you put all of this together on a consolidated basis, we grew revenue by 14, EBITDA by 13. In the context of this demand headwinds, I still say a solid performance overall.
So, well, that's a wrap on Let's Talk Business. We'll take a short break now. There's more news on the other side.